Hi! Welcome to Moneymap episode 21. Now if you are a local or Singapore PR, I've got news for you. Do you know that we have been secretly paying for an insurance we didn't exactly subscribe for? Now before you freak out, it's good news actually. Stay with me. This is Charlie, 32, main breadwinner of the family, senior engineer. He doesn't believe in insurance and hence he didn't buy any. One fine day, he passed away in a car accident and left behind a widow, 2 kids, an outstanding car loan of 30,000, an outstanding BTO housing loan of 250,000, and very unfortunately, minimal savings. In the nick of time, Charlie's wife sat down with a financial planner where they found a glimmer of hope. The advisor pointed out that Charlie has a dependent protection scheme, in short DPS, which will thankfully pay 46,000 to Charlie's family. Definitely not a big sum, yes, but handy enough for them to settle the outstanding car loans and funeral expenses. So what is DPS? DPS is an opt-out term insurance scheme championed by CPF. It covers a maximum sum assured of 46,000 up to 60 years old. CPF appoints 2 insurers, Great Eastern Life and NTUC Income, to administer this coverage for you, and we are randomly assigned to one. In case you pass away, suffer from terminal illness or become totally and permanently disabled, the 46,000 will be paid out to you and your family, which explains the sum of money paid to Charlie's loved ones. We could also call DPS the default policy scheme because once we have made our first CPF working contribution as a local or PR, and if we are between 21 and 60 years old, we will be enrolled into it by default. Unless you opt out, the annual premium is automatically deducted from your CPF OA account. So since Charlie is unaware of the deduction, he is automatically covered. Thank God. Another reason why Charlie could be unaware is because the premiums are relatively small. For Charlie's age category, the premium is only $36 per year, and for the oldest group, the premium is only $260 per year, and we have everyone else in between. Pause the video if you need a bit more time to view this premium table. You can check the status of your coverage and your insurer by logging into CPF website with your SingPass and view under My Messages. With the $46,000 paid out from DPS, at least Charlie's family will be able to tide through this tough period. Is it enough though? Barely. Which is why it's still highly encouraged that you do your annual policies review with your financial advisor. Oh, how about the outstanding BTO housing loan? Charlie got it covered too, unknowingly. But the financial advisor discovered he also has a home protection scheme paid via CPF. The HDB officers signed him up for it when he collected his keys. Thankfully, home protection scheme is compulsory if you are paying your mortgage loans via CPF. Otherwise, Charlie might have just opted out too. So, what is home protection scheme? Find out in the next episode of Moneymap. In the meanwhile, PM me if you need any help with financial planning, and I'll see you next time.